Are we going into a recession or not?
Yes. Next question, Frank.
Okay. Now let's move on to... I mean, the talk of recession, and today they have Powell on the stand, and they're ripping him apart, telling him how shitty of a job he did. We already know. I hate that they talk about the past. It's like, let's talk about the future. What are we going to do to help inflation? But on the recessionary front, I want to highlight of what the big banks are saying, because this is important, right? So first of all, a recession is defined by 2 straight quarters of negative GDP. We had one last quarter. It's probably not going to be this quarter. So we're not going to have an actual recession, a definition of recession probably this year, but a lot of people predicting in 2023 and 2024 when we see 2 straight quarters of negative GDP growth. With that said, Citigroup raised their odds. They say they see a 40% chance of recession. Deutsche Bank sees a 40%. Goldman's 48%. Evercore sees no inflation. And the Wall Street Journal survey of top economists, which was published only 3 days ago, Daniel, shows that there's now a 44% likelihood of recession in the coming 12 months, where in May it was 30%. So you're getting these surveys everywhere. And I find it kind of funny, right? I mean, it's just, to me, it amazes me that we're placing so much emphasis on this one data point. And just to put this in perspective, in December 2007, the Wall Street Journal survey that just said 44% likelihood of recession. So in December 2007, the month preceded 2007-2009 recession, that's when it began, economists assigned just a 38% probability. In February 2020, that's the last recession, they assigned a 26% probability. And I'll give them a little bit there because, we locked down everything, which is going to go down as probably the biggest mistakes we've ever made in our country's history, as we're seeing right now with the money printing, the labor shortage, supply chain shortages, the health effects of everything. Probably the worst thing as a country we ever did and the dumbest thing we've ever did, which we're realizing. I don't think you could argue that or debate that. Anyway, but to put this in perspective, when the Wall Street Journal surveys these top economists and they say 44%, Daniel, and their highest rating is usually at 38%, this is saying there's a 100% chance of recession. 100% chance, right?
Yeah, absolutely. And we've joked about this for some time now, because this is just the perfect illustration of the difference between government data and or any data that you must take with a grain of salt and reality. To your point, technically, definition, 2 negative quarters back to back, we're not going to hit it. If we come in at 0.1 or whatever, and we're technically not there, is it too easy to just harp on everybody, Frank, and talk about how out of touch everybody is that is supposedly the smartest people in the room? Because if you ask your regular folk like me and you, does it feel like you're in a recession already? If this isn't a feel like, what is? Is it $8 a gallon instead of $5 for gas? Is eggs and meat going to continue to go up? Do they have to go up another 30% from here to make it feel worse? Remember last year, the administration had a great time pointing out that the 4th of July cookout was 16 cents lower than previous year. That was a big savings. That goes again with a great idea of the gas tax holiday, which would only lower prices by roughly 3.5%. We'll get into that in a minute.
Yeah,
but the back and forth, I think it's good for this reason. I think your average Joe who is starting to, and I don't have anything against average Joes. I love the Joe Walsh song, Ordinary Average Joe. That's me. I think it's good for the sense of, unfortunately, it takes pain for people to pay attention to certain things. We do our best to make economics and politics entertaining, to pay attention to how to make money and profit. But it's a tough uphill climb because it's not always exciting. You gotta try and do your best. But when markets drop 30%, Frank, even the guy that doesn't really give a crap about money might start to pay attention, right? Because now you're starting to feel it in the economy. And what I hope that comes out from all this is that you see Janet Yellen recently, a couple days ago, says she doesn't think recession is at all inevitable. You go back and forth between banks and when it's going to happen and all that. I think it's good because it only highlights the out of touchness that our quote unquote smartest people are. And I think people will take more interest in their own, and I think that's good for the long term. It's very painful in the short term, but I think it's great for longer term investors.
As I put on CNBC and I see these politicians, I see the Fed, and then I see just UBS saying we don't see a U.S. or global recession in 2022, 2023. You had the Congressional Budget Office, and this is last month. This is recently, a couple weeks ago. They said real GDP, they're expecting at 3.1% in 2022, 2.2% in 2023, then 1.5% in 2024. Inflation, based on the CPI, they're expecting to end the year at 4.7% in 2022. Good luck with that. And then in 2023 and 2024 to go back down to 2%. The unemployment rate to be below 4% for the next 3 years. The Fed funds rate to only go up to 1.9% in 2022. Maybe you're right there. Actually, you're not going to be right there. So it's going to go a lot higher than that. And 2.6% in 2023. This is a month ago. So when I look at this, all I see is bullshit. Like, it's such, like, I think they look at people like the average Joe and say, hey, these guys are such fucking idiots. They're not going to know the difference anyway. So let's just say whatever the hell we want.
I agree with that.
Midterm elections coming. Like, so let's grandstand, because recession is a word that everyone identifies with. In our line of business, we could say we all feel like we're in a recession right now, with the NASDAQ down over 30%, Bitcoin down 70%, most of your assets coming down, home prices coming down. I mean, I can keep going and going and going. I mean, you're seeing net household wealth actually is lower year over year for the first time. That's a signal of recession. Everything spells recession right now. Yes, there's some highlights where earnings are staying up pretty strong. Believe it or not, earnings, and people don't know this, but earnings for S&P 500 are expected to grow year over year, which is insane. Think about what's going on right now. So that means a lot of these guys have not lowered their estimates low enough. But, you're seeing bank loans rise. So, there are pockets that are okay, and home prices are staying a little bit firm. They are starting to come down a little bit because there's low supply. But, mortgage rates, of course, you're seeing mortgage demand for lending is coming down with rates higher. But they look at the average person and say, these people are just going to believe whatever the hell we say. And we've gotten in trouble a lot by just really digging in and doing the research, Daniel, and going to different places and seeing it during COVID, during fracking, during different things, and getting ripped apart because people just watch TV and believe everything they hear. But to see these assholes on TV just saying, oh, it's a 44%. I mean, no one has higher than really a 50%. I think Goldman's a little bit higher than, no, Goldman's at 48%. We're fucking going to recession. The Fed is forcing a recession. They have to force a recession. They have to raise interest rates. We've been saying this for 12 months, right? And then finally, for 18 months. But once they started raising rates, they have to force a recession. They take money out of them. All this massive leverage, which is in the trillions out of the market. So they have to force a recession because inflation keeps going higher and higher. And they don't know what to do about it. They're confused. So the whole recession and trying to avoid the actual word recession heading into midterm elections, I get. But as an investor, like you said, Daniel, look, I'm not telling you not to buy stocks. I'm not telling you it's not going to get worse, because it's going to get a lot worse. But you have to look at what's going on, where you're seeing that 30% decline in NASDAQ. You're seeing that the average PE ratio right now, the average PE for the S&P 500 is trading at 15 times, which is lower than the 5-year and the 10-year on average in history. And maybe those earnings come down. We saw more companies lower earnings than any other point, I think, since 2009 or 10. So you're seeing that come down. But you look at Walmart, Target lowering their prices, M2 growth slowing from 27% year over year to up 6%. I mean, you're seeing it in global yields. You're seeing the bond market crash. It's, to me, when I see shit like this and all the bullshit, it actually pisses me off. But it pisses me off personally, but I want you to use this to your advantage, because you're looking at small caps trading at their cheapest level almost in 25 years. You're looking at money starting to slowly pour into. You look at insider buys through the roof. And again, I'm not saying it's not going to get worse or you're not going to get hit 10, 15% from here, but I do know in 2 years from now, it's going to be a lot higher, because inflation is going to crash. It is going to crash. It's probably going to happen a lot sooner than expected. I mean, you're seeing it right now. You're seeing it in different pockets where home prices are coming down, the Walmart, the Targets. Again, the M2 growth has slowed dramatically. And a lot of this is priced in. So if you're looking at stocks and saying, holy shit, inflation's out of control, it's been out of control. And that's why the stocks are down 30% plus, and a lot of stocks in your portfolio are down 50, 60% if you bought SPACs, and a lot of shit. So you have to look at it that way. You can't signal the same exact risk going on and say, okay, you have to look at everything that's happened since then. And now for me, seeing companies raise their dividends, you're looking at oil stocks really freaking getting destroyed, down 20, 25%, some down 30% in the past 2-3 weeks. That was the point. Everybody was pouring money into there thinking everything's okay. But when it comes to recession, guys, ignore the bullshit. Just say, okay, we're in a recession. How am I going to benefit? It's going to probably result, when you say the word recession, maybe stocks come down a little further. It's going to be like this fear factor. But man, there is a lot of stocks that are trading below 10 times earnings. I covered yesterday of the game plan. China is starting to grow again. I'd start looking at China, maybe an ETF there. Small caps, again, more companies in history are trading more cash than market caps are in history. They hit 10%. That's in history. That's not in the past few years. That's more in COVID. That's more in, in tech bubble burst in 87 in history. So a lot of this is being priced in. And again, it could get a lot worse, but all the measures that the Fed's putting in place is doing everything they can, and it will result in inflation coming down, because people aren't going to be able to afford these crazy prices.